The first question I want to know when I'm working with a trader is, are you helping or hindering your strategy?
Ali Crooks, welcome on the podcast. How's it going today?
It's good. Thank you for having me on. Really pleased to be here.
Awesome. Pleasure to have you here. It's the first time we met and we talked. So the first question I like to ask my guests is, what is one quote that inspires you?
Great question. I would say one quote that is probably top of my list is, you didn't come this far to come this far. And I really like that quote because it reminds me and reminds the people I share it with to have that kind of growth mindset where even if you think you're doing great where you are, there's always more that you can do. So for me, that's one that sticks out in my mind. One of my clients from years ago posted it up in our Facebook group and said how he still uses it today. So it's a great little quote.
That's awesome. That's pretty cool. So for people that don't know you right now, you work for the Trader Support Club. But can you tell people a bit about yourself and kind of what you do these days?
Yeah, so I started Trader Support Club back in 2012. What I'm doing right now is it's kind of the same as I've done for a long while, but again, trying to do it better and do it more. I'm swing trading. I've currently got my own fund that I set up just over 8 months ago. So it's a fully FCA regulated entity. So that's been a really, really big challenge for me is, not just trading my own account, but trading my own account and within a fund as well, because you think slightly differently when you're trading other people's money versus your own funds. So that's been great. And yeah, just still doing my trading room, and we've just been working on some automated entry algorithms that allow some of our traders to be able to get into trades that normally they wouldn't, because obviously they're working alongside doing trading. So yeah, just keep me busy and obviously getting through lockdown as well. So it's for me, it's not that different. Probably like you can still do what you want to do, still do the thing that you enjoy the most.
Yeah, definitely. But that's what to deal with. That's good. Awesome. So I want to go back in time, and can you tell people how did you begin trading? What was the first moment where you came across trading, and how did that go from there?
Yes, it's interesting. So trading for me wasn't. I didn't wake up and go, right, I want to be a trader. Back then, in my probably early 20s, it was more about I wanted just to be rich. I wanted to make money. And my second business failed. So my first business was really successful. Second business failed. And at the time, I was in an investment club. So there was 20 of us that used to meet a couple of times a month. And as you can imagine, 20 people trying to make a decision on buying a stock or buying a share really wasn't something that I wanted to do it because it was fun and I wanted to be part of it. But one of the guys there was a trader, a part-time trader, and I got chatting with him, and then I started learning a little bit about it. But I went off and tried to trade call and put options without knowing really what I was doing, and lost a lot of money very quickly. And back then I didn't have a lot of money because I had a business that was basically on its way out. And that business didn't work out, and I was drawn to trading because to me it seemed like a way of controlling my life. I didn't have to have staff. I could do it anywhere I wanted, but I didn't really have a passion for trading initially. Like, I didn't have a passion for charts. It was more about making money. It was only once I did it more and more and more and got into it more that I started to actually enjoy the process and the challenge of trading. And it was I think it was probably about a year in, once I lost money, I'd made a bit of money, lost money. I actually joined a voice over IP trading room. So not like this where you're on Zoom, but it was literally just signing in over a voice over IP on dial-up, which you may not even remember. They'll dial-up internet connections. And that was really good because the guy that was coaching us there, you couldn't show him your chart. You had to describe what it is you were going to trade and why you were going to trade it. And that was actually really good because it forced you to be really specific about your reasons for getting into a trade. And that's where it went from me.
How did things go from here? Were you profitable back then already, or did you have to do some changes to be able to?
First 2 years was the classic profit, give it back, profit, give it back. So in a way, I think that was good because because I could see that I could do it, but I was giving it back. It wasn't that I in the very early start, I lost nearly £5,000, which again isn't a huge amount of money, but back then it was. And then once I came out of that, what I was doing was what you see with a lot of traders, is that sort of break-even point where they make money, give it back, make money, give it back, and they don't really progress. But what I was able to do after, it took about 2 years, and I think the biggest hurdle I had to get over was trying to make a certain amount per month. So trying to hit a target, because I was like, well, if I can pay my rent and I can pay my bills, then I haven't got to work. So I was gunning for this £600 a month, which back then, again, it's not a lot of money, but back then that would have pretty much covered my rent and bills. And the challenge was that because I was gunning for this amount, it was affecting my trading decisions, but I didn't have the self-reflection to be able to realize that I was making decisions to try and make money rather than follow a process.
Interesting. So what would be your advice for people that are right now break even? What could they do to be able to go beyond that and actually get a little bit better result from break even?
I would say a percentage of that is dependent on the trader. So it depends on their personality style. So I think the first thing is most traders I speak to, they'll tell me what their weakness is. And then when you delve a bit deeper, it often isn't that. They think it's one thing, but actually it's something else. So I think be aware of your decision-making process. Most traders are not collecting enough data on their trades. So I would say number 2 is collect more data, back test more, forward test more. Even if you're currently trading a strategy that you know has got an edge, is back test that. Still make sure that you are continually on top of it. And then get very aware about how you make decisions, because traders can make clear decisions and follow their rules when everything's ticking along nicely. So, they're having, the sort of 2 winners, 1 loser, 3 winners, 1 loser, winner, loser, winner, loser. But as soon as they go into what I call almost like an extreme, so 5 winning trades, 5 losing trades, they hit a bad run, they hit a good run, that's when very often their decision-making process changes, or they bring in too much discretion, or they see what somebody else is doing and drift off and fiddle and change their strategy at the exact point they need to continue the way they are. So I'd say lots of data, be wary of your decision-making process, especially when you're at those extremes of a winning run or a losing run.
How did you manage the move from going to trading part-time to going eventually full-time? How did that happen?
As strange as it sounds, I stopped focusing on it. So I just decided to just trade, just keep trading. And what my coach was able to do. So what I used to do is I used to work a job. So I'd work a job early. So I'd work an 8-hour shift early in a factory, come home and then trade the afternoon session and then trade into the evening. And what I was able to realize was that what I would do is I would trade, if I had 2 or 3 winning trades in the afternoon, then very often I'd carry on as if. But if the afternoon was bad, very often that would run into the next couple of days. So I try and get back my losses. So for me, it was very much a case of not trying to be a full-time trader and stop worrying about making a certain amount each month, and actually just build my account up. And the transition was made probably about 2.5, nearly 3 years in. But for me, I kept my lifestyle very at that time very low. So I wasn't driving around in flash cars. I wasn't having, holidays all over the world. So for me back then, it was just all I wanted to do was have the choice to not be able to have to trade. So the transition for me was, the number one thing was focus on the process and stop trying to make the money I needed to pay the bills. And then I was able to do it. So yeah, focus on the process, number one.
Instead of the outcome, focus on the process. That's good advice for sure. I love that. Has your trading style changed at all over the years that you've been trading? Did you change some things, or do you completely change things, or how did that go over time?
Primarily when I started out day trading. So I don't do any day trading other than one automated day trading setup. So I'm the biggest change is I've gone from day trader to swing trader. and I much prefer it. And I don't know whether that's because I'm a little bit older. I'm not quite, I'm still hungry, but I haven't got that hunger to fire in trades. I don't wake up and think about, getting trades into the market. So say the number one shift is I've gone from day to swing, but I think that's partly also because there's a greater amount of capital there now than there was 15 years ago. So I can take a slightly more relaxed approach. When I started out, I was very momentum orientated. So I had one day trading strategy, 5-minute chart, it was all based on trading with momentum, and it literally was just one entry across about 7 markets. Whereas now I will trade against the trend, with the trend, across about 40 different markets. So cross pairs, currency pairs, majors, indices, that sort of thing. So for me, I've gone a little bit more, I'd say a little bit more broad, a little bit more relaxed. So that's the biggest shift for me. But I'm still using support and resistance. I'm still using moving averages. I'm still using a lot of things that I used in the early days. And it's funny because traders will say to me, "Oh, support and resistance doesn't work," or "Why do you use moving averages?" I'm like, well, because there isn't one system that works for everybody. And I think the more a trader can embrace that the trader sat next to you can be trading in a different way, and that works for him or her, but doesn't necessarily work for you. So I'm still using similar analysis tools. I'm more data orientated now, and the biggest shift is I've gone from day trading to swing trading. So I'm much happier swing trading.
I think this is really important. So what does it mean for a trader to be data oriented? What does that involve, and how should people go about it?
Great question. So when I've spoken to people at expos and I've been to shows, I'll often ask them the question. I'll say, so they'll say to me, how do I get more profitable? What's the best strategy? What's the best approach? And I'll say, well, what are you currently doing? And they'll often tell me the technical bits that they're doing. So they'll say, oh, I trade, fib retracements. I do this, or I this crossover with this. And I'm like, okay, how's that working out for you? And they sort of, and I say, okay, so what have your performance been for the last 3 months? About 3% return. And I'm like, okay, so cross-reference that to the same 3 months last year, and then they go blank. Or the previous 3 months to that, and they go blank. So for me, it's data is number one is a state of mind. So it's as a trader, I look at it that I'm trying to improve my process because I can't control the result. So what can I do? Well, I can follow my process and I can track how well that works. And obviously when you trade, there's a percentage of what you do that is discretionary, and then there's the strategy bit that you can track. So the first question I want to know when I'm working with a trader is, are you helping or hindering your strategy? By you trading your strategy, are you able to do better than the blanket mechanical result that you would have over 6 months? So if you took every setup for 6 months, what would the result be? And then are you doing better than that, or are you underperforming the strategy or not? So number one, I think it's a state of mind. And then two, data allows you to be data oriented. So classic example, you've probably been there, where you're in a trade, you're looking for a target at a level, it's getting there, it gets close, it pulls away, and then comes back, hits the level, and then it goes flying past the level, and you think, should have stayed in. It's the classic emotion that you have. So I encourage my traders to think, well, you should be looking at that trade and recording the maximum exit on it. You should be knowing how many of your winning trades go into a drawdown before they hit target. So essentially what you're doing in those two scenarios is becoming more process orientated and more data orientated. And then you can do simple things. So I'll say to a trader, how many of your winning trades go into a losing position before they hit target? Most traders don't know the answer. But if I know that 78% of all the winning trades I take go into drawdown, then my mind is expecting a drawdown on that trade rather than sitting there thinking, I hope it's going to win. So the link between data and mindset, I think traders underestimate that. So the more data that you can have that you understand, it's no point collecting data for for the sake of it. But the more relevant data that you create, the more it helps your mindset. Another example would be traders hit a losing run, 6 losing trades on the trot, or hit a winning run, 5 losing trades on the trot. There, as I said earlier, they're the times when traders are more likely to break their rules or change what they're doing. But if they can reference back and say, this 4 or 5 trade losing run happened 6 times over the last 8 years, it's not that it's guaranteed that the results going forward will be the same as what they are in the past. But what it does is it allows the trader to go, okay, what's happening now is not out of the ordinary, because traders tend to have recency bias. They tend to focus more on what has happened recently rather than think about what's happened over the last 5 years. So it helps you be more relaxed. What helps me be more relaxed. And I've never worked with a trader that has been worse off for having more data. Some traders, they don't go, I'm so worse off because I've got 5 years worth of data live or back tested. They always feel better about it. And I think the only caveat is that you don't become rigidly attached to it. So what's happened in the last 3 months is not necessarily going to, as not going to happen in the next 3 months. But in the same breath, you can't use that as an excuse to not collect data. I hear that. They go, well, what's the point in testing? Because it's not going to be the same going forward. But having a frame of reference is hugely important. You do it in business. You do it. Do it with your accounts. You do it with your figures. You do it with your sales results. So why would you not do it with your trading?
Yeah, I think you realize the importance of data once you have it. Like before you have data, you don't care much about it. You say, "Oh, it's just data, whatever." But when you have it and you realize what you can do with it, then that's where it gets powerful. So that's definitely good advice. Yeah.
Yeah, and I don't like collecting it. So I'm the first to put my hand up and go, I'll be behind with my spreadsheet. But once I've got it, I always remind myself, once I've got it and it's up to date, then I've got more power.
And there's many ways you can automate this anyway to make it more streamlined and easier. So yeah, definitely. Yeah. I know some people would like to know what's your trading style these days, like what instrument you look at, what tools you use in your trading, and how do you apply them a little bit in your trading?
Yeah, I mean, mine's relatively simple. So for me, it's a top-down approach. So I'm either trading on a daily or a daily or a 4-hour chart. So my trades are executed on a daily or a 4, and then I would say my favorite chart is the weekly, because it just gives me a little bit more perspective, but it's still relevant enough to what I'm doing. And all I will do is I will go through 3 times a week. I'll go through my 40 markets and I'll establish my levels. So usually that's a Tuesday and a Thursday, and then on a weekend I'll clear the charts off. I'll go back, refresh my levels. Obviously, if there's a 5-year high, I won't probably take that off and re-put it. But anything that's relevant now, I'll do a kind of chart refresh. And then for me, I'm trading 2 against the trend moves that require price to reach a predetermined level. And then it's a case of looking at, I use a 5 high and a 5 low band. So I use an exponential moving average 5 high and a 5 low. And essentially, it's a little bit like, the easiest way to describe it, it's like a tighter Bollinger Band. And then I've got a specific setup that has to happen on those bands. So I look for price to, essentially, if I'm shorting off a resistance, price has to show me that it wants to close below the band, and then I'll stage my entry. So I'll come in at the higher band, and then if it breaks the low, I'll get in again. So essentially what I do is I split my trades into about 2 or 3 different entries, and my max risk is 1%. So I won't risk more than 1% per trade. And that's my primary trading tool. So it's basically a reversal play. But then I have a couple of other trades that I will put in there. But I'm basically using moving averages, levels. I bring in a little bit of divergence as well. So if I see divergence on the weekly, then I will probably hold the trade for a little bit longer, because I've got data that shows me that if I've got a weekly divergence and the trade plays out, then I can hold it for a slightly better risk to reward. But my average risk to reward is 3 to 1. So I tend to go for a slightly higher risk to reward and a lower win loss. I get my students to work to about a 50-50 win loss if they can, but I'm quite happy being a little bit below that, because I think as you've been trading a longer period of time, you can cope better with a lower win loss.
Yeah, that's what happened to me too. I used to have a pretty high win rate, like a 60% something. Then I went down to now it's like about 40 or something. So
Isn't it funny when you just said a high win rate of 60, but when you speak to a new trader, they would think a high win rate would be 80. But yeah, a high win rate to us is 60.
And do you have a similar approach where you scale out of your trades progressively, or you go out all at once?
I tend to get out at a predefined level. So I don't scale out as much as I used to when I day traded. So when I day traded, I would scale out more. But I think if someone said to me, what area of trading would you want to improve on? It would be scaling out. I'll scale in, but I don't tend to scale out too much. That would be an area that I could actually probably work on.
Okay. And how do you define your exits? I know people like have different ways of doing that. I use like fixed reward to risk. That's my favorite way of doing it because it's simple and straightforward. But do you do something different? How do you do it?
No, fixed risk to reward. So on reversal trades, for me, I always say to my students that when I'm taking a reversal trade, I'm not trying to I'm making no assumption that the entire move is going to happen. So for me, it's fixed. But what we track is we will track higher time frame moving average. So for example, what percentage of the trades reach the weekly 50? Because again, you're looking at some sort of reversion. And at the moment, on the two main strategies that I trade and a lot of my students trade, we found that the best thing to do, yes, you can have a 6-to-1 win loss or a 6-to-1 risk to reward or a 7-to-1 on a couple of trades. But actually, if you just go for the fixed 3-to-1 on this strategy, it works better. So yeah, I keep it like you, just fixed risk to reward.
What are the main mistakes you see your students make when they reach out to you and they don't get any result in trading? What is the thing that they have to work on usually?
The number one is knowing intellectually that they're going to have losing trades. So you say to anyone, you go, you're going to first 50 trades, you might lose 20, 25. Yeah, they'll nod their head. But then when they have 3 or 4 losing trades, they start worrying. So I think the first one is that wanting to trade the most profitable strategy rather than whether they are better at seeing with the trend or against the trend. So at the moment, you've seen some nice moves on Euro and nice moves on NASDAQ. So my against the trend traders are a little bit itchy, the newer guys, because they're like, oh, look, if I traded, your momentum pullback trade, I would have had this. So I think it's what we call in the UK shiny penny syndrome. So they learn one strategy and then they want to learn the one that's making money today. So it's getting people to, I think, focus and understand that there's a cycle going on. Everything's cyclical, and you'll have your 3 or 4 months out of the year where you do well. And I think that's another thing is that I've noticed over the last 5 years there tends to be about 4 months of the year where I'll make 9 months of my money. So there tends to be a sweet spot, and I think it's getting traders to act the same even if the markets are quiet. I think new traders will, if there's nothing happening, they'll switch off and they'll go, oh, there's not a lot happening at the moment. And as a swing trader, you probably know that you can have a couple of weeks where there's not much going on, but you've got to act the same regardless of what the market's doing. So it's teaching them to, again, focus on their process and lose the need to be right and get validation on their first couple of trades. It's almost like they're looking for validation on their trades.
I'm curious to hear from you. How did you learn these things? Was it the mentor who kind of taught you to stick to one thing, or did you have to kind of come to a reality check or something? A tough time.
I would say it's a little bit of both. I think you go on when you learn to trade, you're only the mirror's on you. When you're looking at a chart, you're not really looking at a chart. You're looking at how you make decisions on that. So I'd done a bit of personal development before, and I don't think personal development is the answer. I think you've got to be willing to take the information on. But yeah, my first mentor was brilliant because he would challenge me. So I'm big on that. I'm big on having mentors, but I think it's very important that you distinguish between somebody who's your mentor and people you chat about trading with. Because some traders are very good traders, but they may give you advice based on how they do things, and that might not be right for you. So a good mentor should be somebody who trades. I don't buy into a mentor that doesn't trade, that's just coaching you. It's like my personal trainer. I wouldn't have a personal trainer that wasn't in good shape, because you only learn a certain thing from theory. But they also have to have the skill to be able to point you in the right direction that's right for you. And some traders can't do that. So some traders can be really, really good traders, but they're not necessarily the best coach or mentor. So I would say, yeah, I learned a lot of this from my first and second mentor, but my second mentor was slightly more trading orientated than my first. My first guy from the US, he was very, very good at asking questions that challenged me. Really good at saying, I'd often say things like, so what do you think about a Euro US? And he'd go, well, I don't know. What do you think? So he would just do this subtle thing where he wouldn't answer the question. He'd force me to tell him why I'm asking it, and then he'd answer. And I do this with my clients. It's like they hit the tennis ball over to me and say, what do you think about this? And I'll just say, well, I don't know. What do you think about it? Because a good coach wants to know why they're asking that question. And very often it's because they're either in the trade, or they're thinking about trading it, or they've seen somebody else trade it and they want to trade it. So a good coach will do that. So yeah, I would say a mentor helped me a lot. Reading helped me. Being an avid learner, and I think like what you promote, this idea of motivation and growth and mindset. And I think I underestimated how much a relationship with money was a big one. I thought I had a good relationship with money, and I didn't.
Oh, yeah, that's a big one. How do you improve that relationship with money?
You look at the patterns. So the classic one is, a lot of people say they want to be rich. So I go, okay, so you say that, but what things are you doing? So guys struggle with this sometimes, but journaling's quite a good one. So, and it doesn't mean writing down your thoughts and feelings all day, but when you think something about money, when you see somebody with money, is your first feeling jealousy? Is your first feeling, you can't do that? They must have something. So become aware of what your thoughts are. So for me, it's like, do you come in thinking they're clever, I'm stupid? Or do you think, is your first reaction, well, they've just been doing it longer than I have? And I think that was the big thing for me, is I started to realize is I wanted to be rich, I wanted to be wealthy, I wanted freedom, but my mind was, I thought that rich people, successful traders, had something I didn't. And that was a big one for me. So yeah, I think you have to work on it daily, or at least once a week. You have to review it and catch your thoughts, because your thoughts become your feelings, and very often that will play out on a chart. It's amazing how many people I've seen who have students in their first year who have a winning run, and they almost feel like they don't deserve it, because as you know, with trading, you can wait for a trade, and then trade it, and it loses, and it feels like you've spent a week iron up a position, then it rolls over and loses. Or you can come in, catch a trade, and it can run and hit your target, and you have 5 of those. I've seen traders that almost feel that they don't deserve it because they haven't had to, in their mind, work hard. And I think that's the other thing, is there's a correlation between wealth and hard work. Yes, you've got to work hard as a trader, but you don't actually do anything to make money. Once the trade is in, there's nothing to do. And I think that's a big hurdle for a lot of people. Once they're in the trade, they feel like they've got to do something. I'm like, you've done the hard work, now you've just got to let it go. So yeah, I think it's really important. Work on it daily, definitely.
And some weeks, like you mentioned, you can have you do almost nothing, no work at all, and then you have a good trade, then you're winning a lot that week. So again, you kind of feel guilty of that, because otherwise you're gonna screw up after. You're gonna try to force things anyway. So that's good advice for sure. Awesome. So where can people find you if they want to connect with you or reach out after this podcast? Where can they go to see what you're doing?
Trader Support Club is the name of my training company. We called it that because that's what we do. We don't have an ethos where there's only one way to trade. So we support traders. We work with people who've never traded before, to people I've worked with guys that have come out of the city in London, worked for a prop firm, and now they want to trade their own money. So yeah, tradersupportclub.com. You can find that on Facebook, Instagram, or just search it on the web. You can follow me on Instagram, Ali Crooks Trading. So just go Ali Crooks trading and you'll find me. So we've got some free material. I put on free webinars as well for our members. And what's nice is you get a little membership area. You can ask us questions. We've got a little private Facebook group. And then depending on what you want to do going forward, that's that. So that's where people can find me.
Awesome. And Ali, what are your goals for the future?
Great question. For me, I've got a very, with my swing trading, I've got a very, very specific plan. So by the time I'm 50, there's a sum of money that I want to reach. So that's there. And then now this fund, I've been toying with doing a fund for about 3 years, and I finally pushed the button on it last year. So again, there's the goal with that. I'd like to have that as 8 figures, and there's a certain financial goal with my own trading that I want to get to, and really just help more traders go through the process. We've just had a guy recently that got FTMO qualified, so that was nice, and I was really pleased for him. So yeah, just the goal is to keep doing what I'm doing, but essentially just do it. I think just do it better. As you know, trading is something that I'll still be trading at 75 if everything still works. I'll still be trading 80 because the challenge of trading is almost enough. There's always a new way you can do things, and if you've got that kind of mindset. So yeah, the goals for the future are build the fund and then reach a certain target by the time I'm 50 with my own trading pot.
And what's the motivation for trading and also getting there to that goal?
I love the challenge of it. I think I've always liked sport. I've always I wanted to be a PE teacher at school, but I saw the car the PE teacher drove, and I was like, so I've always loved teaching, and I've wanted to be wealthy, and unfortunately teachers aren't paid enough. They should be paid more. So for me, the money thing is the measure, if that makes sense. So for me, the money is the measure, but I know that to have an 8-figure fund that I'm managing, I'm going to have a better mindset. I'm gonna have to have a different mindset than I've got now. I look at mindset levels as like floors and ceilings, a little bit like a chart. So to be the person that can manage that successfully, I'm going to have to grow. So the money's the measure, but what motivates me is the challenge. You know, I've done the whole do nothing for 3 months, sit back. I like traveling, I like freedom, I like all of that. But if that's all that was there, I don't think I'd be happy. I like the challenge. I get bored without a challenge.
Yeah, I'm the same way, so I totally understand that for sure. Yeah, it's good to travel, but it comes to a point where you want to do something else and still get work done. So I appreciate that. Awesome. So Ali, I have this question I ask all my guests at the end of the podcast. So the question is, if you could give people one piece of advice on how they can thrive as traders, what would that one piece of advice be? That one action step?
Trade the process. Trade the strategy, trade the process. So you focus on that rather than the result.
Thank you very much, Ali. It's been a pleasure to have you here, and I hope people will reach out to you and connect with you online, and I hope to talk to you soon.
Brilliant. Etienne, thank you very much for your time. I appreciate it.